Oh, it was a trap. Oh, it was a trap. Welcome back, guys and gals. Hope you guys had a fantastic Wednesday trading session. But you know what we always say? You're only as good as our next trade. Time to get ready for tomorrow. It's Wednesday already. It's the 13th day of April, 2022. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, if you're here for the first time, what took you so long? I'll kid with you, though. If you're tuning in for the first time tonight, it's great to have you with me. My job is to find the best trades setting up for Thursday. I'm going to cover all my favorite trades in tonight's video. Got a big Thursday session coming right around the corner. End of the week. Markets are closed on Friday, so a big spotlight on tomorrow's trading session. And I got a bunch of great trades setting up for you guys tomorrow. All the charts are ready in the background, as you can see. Got the oil. Got the NASDAQ, we got the S&P locked and loaded. Hope you are ready for a great video tonight. And boy, bunch of great trades we're tracking for Thursday. We're going to break down all my favorite trades in tonight's video. That way you can finish off the week firmly in the green. And you know me, I'll talk about some traps to avoid, some curveballs to avoid, how to capitalize on those traps tomorrow as well. Now, before we jump into the video tonight, got a lot we're going to cover here tonight. I'm a little bit late to the video. It's been a busy week in the office. Before we jump in, though, make sure you subscribe to our YouTube channel. I publish this video every evening during the week with our best trade ideas. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you have any questions for me tonight, drop those questions in the comment section. I do personally answer all the questions myself. I may not get to them right away, but I do eventually catch them each week. So if you have any questions, drop those questions for me in the comment section. And as always, I appreciate you guys tuning in every evening, carving out some time for this nightly newsletter. If you guys enjoy the video as much as I enjoy making it every evening, do me a favor, hit that like button for me. Appreciate you guys supporting this YouTube channel. But make sure you subscribe, though. In the meantime, let's get this party going. Thursday is right around the corner. End of the week is tomorrow. Kind of a strange end of the week. That's all right, though. We're going to give you guys a good game plan to make some money on Thirsty Thursday. What's going on right now? What do we got in the charts here right now? Boy, everything pretty bullish. Bull market here on the S&P, bull market here on the NASDAQ. Pretty bullish right now on the crude oil. But I'll tell you, there is one very common theme across all three of these markets here tonight, and that is we have ranges below, ranges below, ranges below, and of course, what do we have overhead? Major resistance, and major resistance. So we're definitely bullish right now, and I'm going to definitely be looking for some pullback trades here. But looking at the way the chart's sitting up here right now, I would love me some reversals. There are some nice 10x, 15x reversals off of these highs. I think that's where the big money has potential to be here for tomorrow. Would love to get some shorts coming off those highs. And I definitely have some space for breakouts. We get plenty of space for breakouts on a couple of these markets. I'm not going to give away all my fun tricks for tonight's video here just in the introduction. But there's a couple breakouts I'm looking for, and there's also a couple breakouts that I think you might want to avoid or at least be careful with tomorrow. So we'll talk about those as well. But I'll tell you right now, there are some really nice trades on both sides, both the long and the short side, we're tracking for Thursday. Now, speaking of Thursday, before we jump into each individual chart here tonight, let's just make sure we're all on the same page, because once again, Friday is a holiday. I realize it may not do a very good job at showing you that, but hopefully your brokers have let you know via email. Easter weekend is this weekend. It's Sunday is Easter, and so the Friday before Easter is called Good Friday. You don't see it on many economic news calendars, but if you go to the CME website, you can see close. So markets are fully closed on Friday. Why is it important for us tomorrow? Because it puts a whole hell of a lot of scarcity on the day tomorrow. And so really, whenever you have that type of situation, you have to kind of remember that as we get later in the session tomorrow, usually one of two scenarios happens. Usually the market becomes a little bit irrational because traders that kind of didn't realize the end of the week was there, they start to kind of do things they wouldn't normally do on a Thursday afternoon. And it may get a bit slow tomorrow. Just kind of be aware of that. What I always tell everybody in our trade room is you got to remember that when the markets are slow, trading is like like riding a bicycle. It's much easier when it's moving. You know what I mean? So if it's not moving very much tomorrow afternoon, don't force those trades. Save those bullets, because with having Friday off, next week, next Monday, Tuesday are going to be bangers. They're going to be really fun days to trade next week. So promise me you won't waste any of your ammunition on bad trades if the markets are moving slowly tomorrow. There's no reason we can't trade all day tomorrow. We can definitely trade all day tomorrow. Just be aware of the situation, though. Things may get a little bit weird as we get after, 2:45, 3 o'clock, 3:30 tomorrow afternoon. The big news for tomorrow is definitely that retail sales number at 8:30 Eastern time. That is definitely, since we saw the CPI and the PPI reports, everyone's wondering, is all this inflation, are people buying as much stuff? And that's definitely something we're going to be watching here. You can imagine the Fed is watching that closely, and therefore we will be watching that closely tomorrow morning in our trade room. We also, of course, are watching, too, kind of interesting, rollover, oil. Oil rolls over usually around the 18th of every month. Well, of course, that puts us over the weekend. So according to our software right now, rollover might be happening maybe tomorrow. I want to give you guys a heads up on that. I would be surprised if we see oil. Again, this is only for crude oil. I would be surprised if we had rollover tomorrow, but just be aware of that. From what I can see in the software, it's telling me that we may see some rollover tomorrow. We are currently on the 0522 contract. We are going to watch and see if that 0622 contract gets more volume. So just keep that in mind. It will probably not be tomorrow, but just in case it is, I want to make sure you guys are aware of that. There's a good chance it'll be Monday or at the latest Tuesday next week. So the big thing here for tomorrow is retail sales numbers at 8:30 Eastern time, end of the week. So expect some shenanigans late in the afternoon tomorrow. Keep your eyes on crude oil. And remember, we've been talking about this all week. Will we hear any more updates out of Fed speakers tomorrow? That is on our radar. Will we hear any new headlines out of Ukraine? That is on our radar. There is still kind of that, lingering of those of the Ukraine updates happening right now, and that, of course, will affect markets like crude oil. So just be aware of those known unknowns happening in Ukraine right now. That may kind of toss some grenades in the market tomorrow. We'll see what happens. We know about the retail sales number, though, so definitely pay attention to that. And we'll keep you guys posted in the trade room tomorrow on contract rollover for crude oil. All right, let's keep back to our charts here now. Where's the money? Where's the money for tomorrow? How do we finish off the week with a nice, big, juicy winning day tomorrow? S&P's ready, Nasdaq's ready, crude oil's ready. Now, guys, whether you trade one of these, a great place to start, or you trade all of these markets like we do in our trade room, you're going to learn something new throughout the entire video here tonight. I'm going to go one by one through each of these markets. I'll provide different trade variations, different trade setups, different advanced tactics, different lessons to learn as we go deeper into this video. So make sure you watch all the way through it, no matter which one of these markets is the one that you trade the most. And remember, I try to incentivize you guys to watch this thing all the way to the end. I usually do save some of my best ideas, my best trade setups towards the end of this video. So make sure you stay tuned and watch the entire thing. All right, in the meantime, let's go 1, 2, 3. Let's grab the S&P here first, and let's get this party going. What's the most important thing happening right now on the E-mini S&P? Well, we're definitely a bull market. There's no doubt about that. But we've got some concerns about that. I think one very big, important kind of maybe not that obvious is we are in inside day. So we are basically just inside of yesterday's trading range. Generally speaking, obviously there's exceptions to every rule and everything in this life. But generally speaking, whenever we have an inside day, what are you doing? You're selling off the high of that previous day. You're buying off the low of that previous day. And you're usually trying to stay out of the middle. That's usually kind of where the nastiest price action is going to come from. So an inside day tells me, be ready to buy low, sell high. That's one, I think, very, very important clue. Another very important clue, second big clue here, is the range. Ranges act like magnets. And so in this particular example, we definitely have a breakout of that trading range. There's no doubt about that breakout. They certainly got their leg one, leg two, that measured move breakout. We can definitely see that. So we definitely have a breakout of that trading range, but because it's inside of the range from yesterday, and we clearly have the major tops from yesterday just inches overhead, it is difficult to want to be a buyer right here. It's difficult to want to buy right here. Now, can I buy a pullback? Yeah. Can I buy a breakout? Absolutely. But this is not exactly the most ideal location to be a buyer, just like being down here last night might not be the best location to be a seller. Wait for the pullback and sell it back down again. That's the second clue, is that range acting as a magnet right in the middle of this chart. What would be a third clue here? What do you think a third clue? I think we've pretty much covered this already, but major resistance up overhead with that range down below. I get some channels drawn on. I really like these channels because they're going to give me an idea of where I can catch or trap traders on the wrong side of the market. How about the buyers? What do the buyers want to do right now? The buyers want to buy the dips. They want to buy here. They want to buy here. In all reality, they could buy off these lows as well. There is room to go for a breakout here on the S&P. And pay attention, guys, because this is a very big difference between the S&P and the Nasdaq. You'll notice we've got blue skies up overhead. And what is that overhead? That's last week's close. Now, why is that important? Well, as I've been reminding you guys, once we get to Wednesday, Thursday, Friday of this week, the closing price from last week becomes this very enticing objective, right? It's so common. It's remarkably common how often we touch last week's closing price on a Thursday afternoon, Friday morning, right as we go into the end of the week. So we have buyers. Buyers would definitely, I would say the best money to make on the long side right now is probably not going to be pullbacks, and we'll talk more about that in a moment. It's probably going to be breakouts, because you can see there's a lot of wide open space there if this market starts to hunt for that last week's close at 83.5 here right now. What about bears? What do bears want to do? Bears, I'll tell you right now, bears would love to get up into some of these highs here and short this thing back down. What I also think would be fun too is if this market starts to peel lower here, I think there'll be some great little traps to sell short as we go. This is kind of what I'm hoping we're going to get here in the next couple hours here on the S&P. Either that short coming back down off this kind of hidden channel, or up into some of these areas here and that dump back down. That's where I think some of the easier money will be here on the sell side. So let's talk about it. What if we go up? What if we go down? What if we go sideways? The market's only moving three ways. Let's get ready for whichever we get here tomorrow. First things first here, we're definitely bullish right now. So what if we go higher here? As we go higher, you're going to want to memorize this pattern. This is a pattern that's been very good to us in our trade room. And that is, I'd like to see this thing go up, take out some of these highs. I'd like to get these buyers, because we are bullish after all, trying once, trying twice, getting now watch how I do this. Once I get these buyers to try twice up here, what I'll do is, because we're so bullish, I'll find a trend line off that low. I'll bring it up around that high, and that trend line becomes the kind of the trigger point, if you will. We have one back here, right? We go up, buyers once, buyers twice, trend line off that high. See that? See how that works right there? That's the same idea over there as we're trying to get up over here. Now, if I can get them to pop up into these highs, get these buyers again to try once, try twice, get that trend line coming over, find that little channel, get a nice little signal coming off that high. That's a money trade. That's a 2-try failure setup. Why 2 tries? Because we're so bullish. Right? Because so bullish. We're at a level of resistance, range below us, inside day. I love this short. Now, remember, your job isn't over yet at that point. Once we get that move back down into that trading range, now what do? No. You don't kick your feet up on the desk. You look for the new entry. Second entry coming up next. Find that new channel. Find that high of the channel. Look left. Find that prior swing. And as I always tell my students in the trade room, you may not have the confidence or experience or the setup to get that short off the high, but make no mistake, this is a pullback that you don't miss. Okay, this is one of the easiest layup trades you're going to get. Now, a lot of times these will be failures or trap patterns around the moving average, pullback combinations, and so that's something we're looking for here tomorrow. Trap setup, failure pattern, pullback combination. Now, I realize that most of you guys and gals have already taken the free trading course. You've already learned all of these setups. You know the rules. You know when to take them. You know when to skip them, right, when they're not good to be taken. But if you are one of the few folks here who have not taken that free trading class, if you haven't learned the roadmap that we use, all the setups, what I'll do is I'll put a little link up here, a little pop-up for you in the upper right-hand corner. If you're like me and you can't stand missing winning trades, or you're taking too many losses, or maybe you're trying to make the transition from working a full-time job to trading full-time every day, I'm going to give you a great roadmap to follow inside that free trading course that linked up in the upper right-hand corner. You'll learn all my entry patterns we use in the trade room, all the rules, and tons of examples so you can make the transition and trade this stuff on your own as well. So grab that link that popped up there, and that will get you going in the right direction. That way, the next time I say to try failure into, what do we always say? First test is the best test. You'll know exactly what I mean when I say that. Okay, as we go lower here, as we go lower, what's a good way as we go lower here right now? Here's another really good setup I like a lot as we're going lower. As we pull back, remember this range below us, major resistance up overhead. Oftentimes what happens in these situations is the market will kind of pull back. It may not collapse, but it'll pull back and it will start to kind of grind down a little bit. Once it starts to grind down like that, mark up that channel low, bring it right up around that high, and this is where you want to get above some of these prior swings. Get that trap above that high. I really like this trade short a lot. I do realize we have some support here, and so what I'm hoping, what I'm kind of anticipating is we may see this thing kind of roll over, bounce up off that area, up into that channel, and then again, trap, get above that moving average. Buyers come in, they try to buy it. There's a range below us, though, acting as a magnet. Buyers try, they fail, traps, failures, and pullbacks as we go. I really like that trade as well. And it may be a little more aggressive than I'm drawing it. You know what I mean? It may drop and really start to roll over. That is definitely not a bad thing. Just make sure you're aware of kind of draw that channel down, get that pop up, trap in those buyers above the moving average, and then hit them right where it hurts as we go back down into that trading range. How would I buy it down here? Is there an easy way to buy it? I'll tell you, it's not going to be easy to buy this thing as we go. I think probably the best place to buy this will be to wait for that drop down and then get bears trying once, bears trying twice. All those stops now are going to be right above those highs. And this is definitely a good setup. We'll see what we get tomorrow. It is my favorite, but it's possible. Bears try once, bears try twice. And then as we see that nice strong signal candle closing back above the moving average, we can then look for that jump back up. And then remember, those deep pullbacks, they love to trap right before they retest those highs. So that's definitely something to keep an eye on as well. Buying that seller failure, literally trapping in those bears coming in, and then going in and grabbing that little trap setup right before we go back and we retest the high. Now, by now, maybe you're wondering, what's the difference down here? What's the difference? So the difference is if we poke lower and start to grind down like that, the grind down is the giveaway. Then you draw your channel off that grind, you mark up those highs, and you get ready to short that high. If it slides lower here, and then we start seeing one try, higher low, higher high, higher low, right? You start seeing those higher lows here. That's when you know the bears are struggling here. All their stops are sitting right above that high. Remember, it's still a bull market. I've been talking about shorting this thing so far, but it's, again, there's no doubt it's a bull market. It's just it's an inside day with a range below us, so probably the easier money to the sell side. Remember, though, we are not in the business of predicting. I'm not in the prediction business. I'm in the take whatever this darn market gives us business. And so we get those two try failure. Now we can buy into those stops and then try to grab that add-on right before we get back up to retest the high. I like that trade a lot. I hope we get the short, but hey, I'll take that setup if we get that one as well. So make sure you're aware of the difference on that. Now, how about a breakout? How about a breakout? I'll talk about how to buy down here. I want to show you guys how to buy off of this low because that is definitely something we should be ready for tomorrow as well. We'll talk about that on the NASDAQ though, so don't go giving up on me yet. How about a breakout though? Because the NASDAQ doesn't look as good for a breakout. So it's probably going to be a bit easier here to be a breakout trader here on the E-mini. Now, again, we have to really clear through this area. So one breakout pattern I'll be looking for here is take out that high, hold the pullback to the moving average, and jump. Okay, this is called the 1, 2, 3 breakout. It's a very, very simple pattern. These also work in ranges. Okay, whenever we see a strong breakout, a pullback, and a jump off the moving average, what do? We immediately draw a trend line off that low. We mark it down at off the high. We mark it off that low, and we buy that first pullback. Okay, see that I marked over there? That's the same thing up here now. Okay, same thing up here. So if we jump again up into those highs or through those highs, it'd be ideal. Remember though, we're not going to buy that first pullback. Okay, there's a very good chance that first pullback eventually fails and goes back into that range again because of the inside day I talked about earlier. But if the buyers can jump off the moving average, now they take control. I now mark up that high, I mark up that low. Again, I love to look left, find those prior swings, get under a prior swing. It will almost always put you below the moving average. And when you're under the moving average, this is exactly where the bears can come in and try to short that moving average. We can then buy into those stop losses because, again, it's a bull breakout. Where's my target on this? It's a very easy target. Take the size of the first leg and the size of the third leg. It's a very, very easy way to find a good fine-tuned final target on that first test off the low of that channel. I would imagine that buyers would love to get up to that 45.10 tomorrow, but be aware there's a very good chance though we settle in somewhere around that 44.83. It wouldn't surprise me at all if we saw maybe like a pop and grind, right? It pops up, good news comes out, whatever it is, pops up, it grinds higher. We then find that new channel. We mark up that, right? Mark the high, mark the low. It's a very strong move. And so we're anticipating another leg in the same direction. So we try to grab that first test, grab that trap, grab that failure, that pullback, and we go from there. It would make a lot of sense for like a breakout. We call these pop and grind breakouts, right? That kind of pop and the grind of that breakout. We'll talk about a few more on the NASDAQ and the crude oil as well. But that pop and grind breakout, grab that trap, grab that failure, that first pullback, first leg, third leg. That's going to be your objective, so to speak. It wouldn't surprise me, though, if once we get that measured move, we end up sinking back down and kind of settling in around this, this last week's close as we go into the end of the week. All right, so just kind of keep it in mind on the S&P. Got a lot of really nice trades. You can see we're tracking here on the E-mini. Let's go grab the NASDAQ, because we're already getting kind of late in this video here right now. Let's grab the NASDAQ. NASDAQ is very similar to the S&P in the sense that we do have an inside day. We're definitely bullish. There's no doubt about that. We're bullish here in the NASDAQ. It's an inside day. Okay, we're inside the range from yesterday. Inside days usually mean it's best to buy low and sell high, not the other way around. We also, of course, have a range. And that range below us is just kind of like the cherry on top. When you see an inside day, you're like, oh, buy low. Oh, there's a range there too. Okay, well, twist my arm then, will you? So it really lends to itself. That range acts like a magnet. And you can see they definitely have a breakout. I do not want to make you confused on this. This is not a range environment. It is a range, but again, it's inside day. So the fact that we've got most breakout legs, just so you know, when a market has a range breakout like this, we take the size of that first breakout leg, and it's almost always used as a measuring leg. It's a little bit different than, like I said earlier, the first leg and the third leg. That's when the market's trending. When the market's trending, it's first leg and third leg are the ones that are very symmetrical. It's a pretty easy rule. When we're trending, it's first and third leg. When we're range bound, though, it's almost always that first breakout leg creates that measured move leg. So talk about a great area of resistance right now, okay? We've got the measured move area up overhead. We're sitting right at that, not at the high from yesterday, but it's pretty close as far as I'm concerned. Now, how about the breakout area? Okay, so this is obvious here. Look where we are here right now. So think about the S&P. The S&P has last week's close. Last week's close, it's way up here on the E-mini. So what are we shooting for in here? You know what I mean? This is the big problem I have with the breakout in the Nasdaq. Now again, does that mean we can't see a break? Of course not, right? This market can do whatever the heck it wants to do, right? It can go to 15,000 a blink, and it might. Who knows? Right? But we know right now, though, this looks a lot more discouraging for a breakout than the S&P does. S&P can easily push that high, bust up to that last week's close. If we're hunting for the last week's close, we're there. Hello, we're already there. So it doesn't seem like as desirable, not maybe as likely, but as desirable of a breakout scenario here on the Nasdaq. Where do buyers want to buy? Yeah, buyers want to buy the dip. You know, they want to buy the dip right now. And again, if we get a breakout, they can buy the breakout. I wouldn't hold your breath on that just yet. And the buyers can also buy off this low. We'll talk about this low here because we didn't cover that on the S&P. So we kind of know where the buyers want to go. The sellers have really the pick of the litter right now. Again, we'd love to go up, get some reversals off this high. We'd love to get this thing to start to tumble down, grab some of those hidden channels, you know what I mean, and short off this high here. I definitely want to keep that on my radar here. And again, I've got my channels drawn up because I like to anticipate if I want to be a seller, for example. I like to think, okay, if I was a buyer, you know, if I didn't realize it was an inside day, and I didn't realize there's a range in the middle, and I didn't realize I was sitting at you know, I probably shouldn't be trading if I don't know all that stuff to begin with. But, you know, nonetheless, though, if I didn't know any better, and I thought, all right, I'm going to buy a pullback right now, where would I be doing it? I'd be doing it right around here. You know, down around some prior swings, down around some channels, right? Some trend lines there. So I definitely can see the value in looking for that area. You know, like I said before, I think there's very good chance that we may bounce off this area, and that could bounce right into just a great short there for those sellers. So I like that kind of anticipation there as well. So again, a lot of this is the same, you know, on the Nasdaq here. As we go higher, it's 1, it's 2, it's back, right? It's dropped this sucker in. We are selling off that 2-try failure. We're finding that new channel by drawing off that low, marking the high, finding that. And again, I always say trap, but this may not be a trap. You know, it might be a failure pattern, a pullback combo. Where's our target at this point? Back into that range. Absolutely, right? That range will definitely be the objective as we go here. Like I mentioned, I really like the idea of this move going lower here. You know, seeing some buyers coming in. They try to buy it. We pop it back up. We get just above one of these prior swings for a beautiful, if you take the free video class I mentioned earlier, I always talk about how the best traps usually happen just outside of that channel. The best traps, right? The best traps happen almost always just outside of that channel and above a prior swing. Trap set up, failure, right? Buyers coming in, buyers are trying to buy that pullback. When they fail, we can then look for that short going back down in. Trap, failure. And then don't forget, as this thing rolls over, that first pullback is a money trade too. So trap, failure, and of course that first pullback off the moving average as we go. Nothing is new there on the Nasdaq. Same thing here. We pull back, rope in those bears once, rope in those bears twice, let them try twice, hit them right where it hurts, and then as we go back up to retest that high, find that trap entry and hit them again. Again, make sure you understand the difference in this setup. Okay, if we roll over and start going lower low here, and no, we don't want to buy into that. Okay, that is not the setup we're looking for. We want to get this pullback, trap in some of those bears, get those higher highs and higher lows. Ideally, if we're really lucky, it'll be a higher high and a trap low. Right? If we're really lucky, it'll be a little trap entry off that low. right? That's a little more advanced tactic. We'll talk about that more in the free trading course, right? Which you guys, I'm sure most of you guys have already grabbed that already here. Okay, breakout. What would a breakout look like here? I definitely think if we can get up, if we can hold, and if we can jump off that moving average, yeah, that's definitely a 1, 2, 3 breakout. Again, I'm not saying this can't happen. This can definitely happen. It just doesn't look as likely. That's all. But if we can get those buyers to jump through that, through those highs up there, great. I'll mark up that high. I'll mark up that low. I'll drill down to my faster time frame, which again, you'll learn more about those time frames inside that video class I mentioned earlier. Grab that trap, grab that failure, grab that pullback. Where's my target? Again, first leg, third leg. That'll give you an idea of where that next objective is, because there is quite a bit of wide open space up there. So we definitely should be aware of that here for tomorrow. And again, same thing here would be the pop and grind. Let's say we pop up and start to grind higher. These are pretty common. Pop and grind. Mark that nice tight trend line there. Bring it all the way down at that low. Look left. Find those prior swings. Get underneath one of them. Get under the moving average for that failure pullback combo. First leg, third leg. Another one I would keep an eye on. Another breakout I would watch. This would also go along with the S&P as well. Is the 2-try breakout. What do we always say? Strong move up, shallow pullback, higher high in price, traps, baby. That's a great setup. Again, they're going to have to put some vinegar on this one. They're going to have to put a little bit of sugar on that one to get it pushed through the highs there. But hey, again, who knows? Maybe some good news happens out of Ukraine. Maybe a Fed speaker says, what, we got all this wrong. And inflation's coming down tomorrow. In fact, we're going to raise whatever, right? Who knows? This market easily pump higher. If we see a real strong spike up, a shallow pullback drives buyers crazy because you don't get a chance to get in. The higher high confirms this is not a V-top. Right? The higher high confirms it's not just going to sink right back down in. Once you see that strong move, shallow pullback, higher high, traps, baby. Absolutely. Love that setup as we go for a breakout going higher. And honestly, there's so much space up there. We'll have to kind of look for our new symmetrical measured move targets once we get there tomorrow morning. All right, so keep an eye on those. But again, do not be surprised if we busted those highs 1, 2, and right back down, right? Like we saw back here. Don't be surprised if again, like we saw here, if it pops up, buyers once, buyers twice, and we're shorting that thing back down into that trading range as we go. Let's talk about buying down here, okay? Because by the time we get down here, it's going to be hell of a bear market at that point, okay? So we can buy off this low. But what I want you to remember is by the time we get down to this area, if we get down to these lows here tomorrow, the best way to make money in a big move down at a level of support is to wait for a retest and then buy it back up. So what you kind of want to think about with this is what I always tell our students in the trade room is it's just like this. It's just like the game plan from yesterday. Remember how I said yesterday, that big move down? I don't want to sell down here, but if I can get that pullback, I'll look for that retest, and then we can go back up. Okay, it's kind of like a pop and a pullback. Okay, I call it pop and a pullback. So basically, let's say that we make this big again. I'm not going to go over all the sequence again, but let's say we make this big move down here. Okay, then remember at this point, there's a ton of momentum here. This is a ton of momentum. And whenever we see a real strong move in one direction, a la see last night's video, anytime we see a strong move in one direction, what do we expect? We expect a relatively deep pullback and a retest of that low. And then from there, or close to that low, then from there, then we can buy it back up. So what you want to be thinking about if this thing completely rolls over is we're looking to play both sides of this. We can sell the pop, sell the pullback, right? So there's the pop, right? Sell the pullback and then buy the bounce. Okay, so what would that look like? It would look like this. Strong move down, nice strong bounce off that low. Remember, there's a range above you. So just like we talked about last night, what you want to do is let those buyers try a couple times. You have all of that momentum, and then simply sell it back down to retest that low. This is a very, very reliable trade in a big, wide range. You know what I mean? Yeah, I do want to buy back up again. But when I have this much momentum going, it's all, nothing's ever guaranteed, obviously, but it's almost guaranteed you're going to see a ton of bears trying to run that thing right back down to that low. So just like we talked about in last night's video, I like that. Even though I want to buy that low, I like that 1, 2, because again, they're going to want to go back up into that trading range. Let them wrap that rope around their neck a few times and then hit them right where it hurts with those stops. And then once we get back down to retest that low, yeah, now it's on. Okay, now we go 1, we go 2, and we have to go twice because it's so bearish. We got to go twice. It's too bearish at that point. Once those bears try twice now think about it. They already have their objective. Okay, mission accomplished. The sellers are taking their profit down here. Okay, they should be. Okay, so who's selling right there? Usually it's rookies. Usually it's small account traders who don't know any better. They haven't watched this video enough times yet. They don't know any better. They keep really tight stops. This was me 15 years ago. I would say, well, it's a lower low, so we should sell. I'd make up some stupid excuse. Pivot point or something like that. There's a fib level right there. We find the stupidest ways to justify trades, and we're new traders, don't we? I'm sure I can get a couple thumbs down on the video for that. But we know that's what happens, right? When I was a new trader, I would come up with the craziest ideas in the wrong places to sell. But once those bears try a couple times, their stops are right there waiting to get hit. Range above us, major area of support. The sellers, all the professionals are already in. They're out now. And so now we're just battling against some rookies who can't really defend themselves. And this is where it gets fun. It pops up. We get that new hidden channel and we buy that first test. So this is again, pretty much the exact same scenario that we talk about selling off the high. Okay, I'm sure you can see it by now. On the highs, we go up 1, 2, drop it down, find that new channel, and hit the top of that channel. And it's a 2-try failure into that first test. This is the same sequence down here. It's just the opposite direction. It's 2 tries for the bears, and then finding that channel and hitting it right there. All right, guys. Can I get a hashtag light bulb moment in the comment section? Is this making sense? Because this is where the money is. This is where the money is, playing both sides of it. I really hope we get enough movement tomorrow to get this pattern set up. Because it's a really fun trade to take. It can be very profitable as well. So keep that in mind as we go here. All right, let's keep going here. Running low on time here right now. Let's grab the crude oil. Let's wrap things up here on the oil. What's going on with the black gold, the Texas tea, the oil futures? Again, keep your eyes on some rollover. This is the 522 contract right now. We're going to be potentially rolling over here on the 622 contract right now. If you go to the so you'll notice here right now, we're still well above on that 522 contract. So you'll notice, though, the software says 1 day until rollover. So we'll see. It doesn't look like we're going to get rollover here tomorrow, but just going to keep that on your radar, though. It may be at some point tomorrow. It may also be chances are it'll be on Monday. So just be aware of that for Monday's trading session. What's the most important thing right now on the crude oil? Well, I don't want to sound like a broken record, but we have something very similar here on the oil. We're not an inside day. Okay, that's one difference. We are actually outside of yesterday's trading range. So it's not an inside day, but I'll tell you, it's kind of an inside week. It's kind of an inside week. If you're going to spread this out a little bit here, you'll notice we're basically looking at one big trading range right here. We've got major areas of resistance above. We're basically at a major top above a big range, and we've got that major bottom down here. And, as you can see, the markets have been rotating through. They went below it, back up again. So we have a situation that is very similar to the S&P and the Nasdaq, where we have major resistance above us. And we have just look at the ranges, right? Look at these ranges here as we go. This is kind of that big range from last week. We had a range this morning, range over the inventory report today, and possibly a new range here. So, I have to say it's going to be a little bit of the same stuff here on the oil. I like to keep this stuff nice and spicy and give you guys some variety, but this will be a little bit similar here on the oil. As we go higher, I would love to get that 1-2 drop back down and find that first test off the high, right? Find that short off the high, short the 2-try failure, short that first channel test, and get back down into this area. If the market, I really think, and this is a very good example of a prior support level along with that trend line, this is definitely an area where you'd expect to see at least some profit taking from short sellers off of this high. So definitely try to anticipate. We may not get that pop and grind. That pop and grind looks a little bit more likely on the Emini and the Nasdaq, right? Pop down, grind down, trap, failure, pullback combo. We may get that. That will be great. What seems to also be kind of a likely scenario would be a move lower, and then basically a pop and a pullback, right? It breaks lower, it pops up, right? Pops back up. Buyers come in, try to buy into it. When they fail, we're simply grabbing that failure, going back in, grab that pullback, and hit them back down into that trading range. So you want to think of it that way. Same thing we talked about on the E-minis. As the market goes lower, don't chase it as it goes lower. Wait for the pop up and sell into that pop up as we then go out and try to find some of these channels and sell off the high of that channel. So very similar scenario there to the E-minis. How about the breakout going higher here? There's plenty of space for a breakout here. 105, of course, is a big round number. We haven't made it there yet, but I definitely think though that a 1, 2, 3 breakout pattern is definitely in the mix for tomorrow, especially with the situation happening in Ukraine. First leg and third leg are definitely going to be on our radar. Again, I'm just simply keeping it simple right now. This could be a trap setup, a failure setup, a pullback combo, maybe a strength trade hidden in there as it blasts off of that channel. First leg, third leg are symmetrical. Don't be surprised if we see a pop and grind as we go higher. Those have been pretty common lately across all of these markets. Draw that channel tight, find those traps, and grab that first pullback. Or again, we may see that 2-try breakout. Strong move up, shallow pullback, higher high in price, traps, baby. One of my favorites as we go higher here. What if we go sideways on this? Oh, and same thing too on the oil. If we end up all the way back down at that low, what's the game plan? That's a lot of momentum. So think about the pop up. Think about trapping in some of those buyers who are trying to go higher. Let them dig their own grave, hit them right in those stops, and retest that low. Take that profit, let those bears try once, bears try twice, and hit them right where it hurts. Trade both sides of it. Sell the pop off the low, buy the failure off that major support area. Okay, and then of course, right? There's always, this also goes to the S&P and the Nasdaq. Look at last week's close. So it does seem like it's a little bit unrealistic. For tomorrow, this would be almost this would be what, a 6-day, $6 move. So it's basically 104 to 98. So not unheard of. $5, $6 move, not unheard of here on the oil. We'd have to get down to these areas though. The bears would have to hold a pullback and really blast through, right? Or else we're going to probably end up going right back up into that trading range. I have no problem with that. Okay, I'll gladly take that first test off the high of that channel, but we have to take out these lows. We have to prove these bears actually want to hold this. They didn't do it here. They didn't do it back before, so I wouldn't go holding your breath on that. But if we can get that 1, 2, 3 breakdown, I can definitely then look for that short off the high of that channel. And last week's close is definitely going to be something that we'll keep on our radar here. How about a range up here? This is one variable that we haven't talked about yet today, and I'll save the best here for last. It's a bull market at that point into a trading range. Now, ranges are pretty interesting here because if we see a range develop and stay here overnight, that trading range all of a sudden becomes a really important part of this because the new range is a new magnet. This actually makes a lot of sense, and what you want to do is you want to really focus on finding support levels like the trend line, support levels like that prior swing high, and then again, because the ranges are so prominent below us, same idea. You want to buy underneath that trading range. But once we get underneath that low, you know what's going to happen. The bears are going to come in. They're going to try to force this thing going lower. So 1 try for the bears, 2 try for the bears, and we'll buy it right back up again. How about the short side? Can we sell off the high? Oh, absolutely we can. Right? If we can get that jump up, now we're into major resistance. Same idea. 1 try for the bulls, 2 try for the bulls, and right back down again. Right? That range acts like a magnet. In all reality, guys, if we go sideways in a range here, that range does give you more confidence to be a buyer down here. Because it really goes to show, it goes to prove that buyers are as the inside, as technicians would say, they've accepted that price. So if we end up sitting there for a while, what is that? It's called price acceptance. If you study market profile, auction market theory, things like that, it means that price is being accepted. And so we definitely expect that buyers will hold that support level off the low. Where would our targets be to buy off that low? Back to retest the high of the range. And then remember, the size of the move lower, size of the move higher, that makes for an excellent final target, and then that makes for a great 1, 2 back down again, or don't count the breakout out, or they pull back, they hold the pullback, and they blast. What do we do with that? 1, 2, 3 breakout, find that new channel, and party on, right? Up to that next, what was that level above us here? Yeah, basically 108, 108.50 as we go higher here. So watch that new range. We'll see if it forms here overnight. Keep an eye on rollover. Again, it doesn't look likely right now, but a lot can change. Again, once that 622 contract has more volume, then we make the move. Okay, you really can't mess rollover up. Okay, once that 622 contract is more volume than the 522, make the switch. All right, guys. And if you have any questions, drop those questions in the comment section. I'm always checking the comments to make sure we answer questions here. And remember, this is the easy part. This is the easy part. Getting the game plan put together here tonight. We plan our trades tonight. We trade our plan tomorrow in the trade room. Guys, if you're missing too many winning trades, or you're taking too many losses, or maybe you're like I was when I was a new trader and you really want some sort of roadmap to follow, some mentor to work with. When I was a new trader, I had bad psychology. I had bad anxiety. I didn't know what I was doing. I was losing money. It was a painful experience. Once I found a mentor, everything got so much easier. So that's why our trade room is there. We've structured our trade room to be a great place. Folks come in and learn and earn and do it the right way, get questions answered on the fly, avoid the losses, take the winners. You're going to love it. Get a great group, get a great trade room. All the information for that will be in the description of the YouTube video. So grab that link, grab the free course, learn the strategy basics, learn the setups. And again, don't forget, I'm going to be here if you have any questions on the way. So don't be afraid to call the office. I know I go pretty quickly in these videos, but I can easily slow things down though. I can slow things down here and answer questions here on the telephone. So call the office. I'll be here to help as you need me. In the meantime, I hope by now you subscribe to our YouTube channel. Hit that like button if you enjoyed the video tonight. Get some rest because tomorrow's going to be a busy day in the trade room tomorrow. I will see you tomorrow morning at 8 o'clock Eastern time. If not, you better be here tomorrow night. We'll talk about getting prepped up for next week in tomorrow night's video. That's all from me, guys. I'm out of here for now. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.